Hello, everyone. My name is Jeffrey Kennedy, and welcome back to another episode of Market Academy. Well, as you know, in some of my videos previous to today, you've heard me mention several techniques. For example, reverse Fibonacci, that's something I kind of came up with, 20 plus years ago. Of course, the KCT technique, which we discussed last week. And then also, too, there's another technique I use for timing called the Kennedy timeline. Now, again, I kind of apologize or kind of laugh at myself, but it is kind of common for technicians to, if they find something unique or something that they feel strongly about, they like to personalize it and name it after themselves. I'm certainly no different, but when I do that, I do so kind of in jest as well. But I actually would like to spend a little bit of time talking about the Kennedy timeline because I want to give you a little bit of backstory on how I kind of like stumbled across it. Now, just because I stumbled across it doesn't mean that other technicians had not observed this previously. I'm sure they have. Remember, technical analysis has been around since the early 1900s, and depending on the type of technical analysis you study, for example, Japanese candlesticks, it's been around for a couple of hundred years. So going back to this price chart, I want to just give you, again, a little bit of a backstory on the KTL technique. And this would have been, 10 years ago or so. I was doing some analysis of Apple. Okay, and I was looking at the sell-off here that we saw back in, say, '08, the big decline here. And I noticed that from high to low, you can either draw a box or you can actually draw a trend line just simply from high to low here. And that's the KTL, that's a traditional KTL. And then what I observed was, for example, just simply taking that a mirror of the duration. Basically, what it does is it kind of lined up really nicely with the next reversals to the buy side in Apple. For example, did a really good job of kind of saying, okay, hey, this period of time back in, say, 2013 was a good opportunity to, say, rejoin the larger uptrend. And then the same thing again occurred once again. This would have been back in 2015 to 2016. Again, we're just going with the original duration of that '08 decline here. And you can kind of again see it lines up, not perfectly, but it does line up, or it gives you just kind of it narrows the vicinity. It narrows the window of where you can actually look for reversals in price. So again, I stumbled across this, 10 years ago. It was new to me. It may not be new to you. This might be something old hat. I don't know. But I use it, again, quite reliably in much of my work and have for over a decade now. For example, we've talked about Kennedy timeline, the technique, before in Market Academy. This would have been going back quite some time now in AMD. Okay, remember when we were looking at the sell-off that began back in December of 2021? We basically did the measured move here, the original KTL technique. That secondary black line goes from the high of the move to the point of what I call recognition. That's where things just kind of like blast off and don't look back. So that gave us a window. Okay, well, we just took a mirror of the duration and then projected it forward from the high that occurred in March of 2024. And you can see that the low, the recent low, this year's low in AMD fell right within that window. And that's where we saw the reversal in price. So this technique, I think the value of the technique, it doesn't, again, sometimes it lines up perfectly, sometimes it doesn't. But what it does do is it prevents me from looking for, say, a reversal in price or a continuation of a trend too soon. Okay, you all know that feeling where you like something to the upside, so you take a position, and then it comes back in your face, and then you get out because of risk management rules and whatnot, and then maybe a week or a month later, what you were originally anticipating unfolds perfectly. So your analysis was spot on. You were just a little bit early. This technique, the KTL, aids me in preventing and, say, participating in something that I believe is going to occur too soon. Okay, and this was just, again, one example of AMD. Well, we did the same technique again by looking at Cleveland Cliffs. Okay, all we did was we drew the KTL from the high in 2017 to the low in 2020, just projected the duration here going back to 2022. And so that said, okay, hey, somewhere at or near May 25th, we ought to be looking for a low in Cleveland Cliff. And since then, we've seen prices do really well. In fact, this year's lows thus far in Cleveland Cliffs was right there at 563. Well, you can clearly see where we're trading right now. That's 1130. So we've doubled in price. Okay, and again, what the KTL technique did is it narrowed our focus. Okay, it allowed us to identify a very high probability, say, window of opportunity on where we could identify confidently, or say in a high confident manner, where we could expect a significant reversal in price. These aren't the only two examples. Some of you might remember this example going back to, well, this would have been sometime in 2024. Okay, all we were looking at here is just, again, some measured moves in time. We were looking at this is the GDX, the Market Vectors Gold Miners. Okay, so we started off with the high in 2016 into the low of 2018. And then we noticed 38, this would have been 2 weeks, 2-week chart here. We had that pop, that big reversal here. Okay, and all we did was just take a mirror of that time. In fact, we can actually go ahead and draw the actual line on the chart here, put it on the chart, and you can see this is when we should be expecting an advance in GDX. And we were looking initially up to 45.06 and then subsequently 55.27. And you can see since then, since I posted this original this original price chart, and this would have been back in, say, April, May, maybe June of 2024, where we were trading 35 at the time, where we were looking for a significant advance. It occurred beautifully. Okay, so it is a very valuable technique. Part of the reason I wanted to show you the technique again today is because I found another stock. This is Erie Indemnity Company, ticker symbol ERIE. Okay, all we're doing again is we're just applying the KTL. And we're going to start off with that line originally. This would be the decline here. So we're just saying, okay, hey, this is the proportion, this is the duration of that sell-off. Okay, so a proportional duration, again, just going back to the high here that occurred back in September of 2024, then we really shouldn't be looking for the termination of this counter trend move prior to May of 2025. Okay, well, we've since come down just a little bit lower here, and now it appear to be reversing. So I think this idea here fits in very, very well with the whole idea behind, or the value behind, the KTL technique, the Kennedy timeline technique. Moreover, if we take a look at Erie from an Elliott wave perspective, you can clearly see 1 up, 2 down, nice 1, 2, 3, 4, 5 for 3, pull back in wave 4. Here's the prior fourth wave extreme of 1 lesser degree. We did come down to the 618 retracement of the wave 3 advance, which is fine. We also, too, can apply a little bit of what we learned last week about the significance of the penetration of the upper boundary line of the base channel. We also can see the value, again, the secondary value of the base channel trend lines for our support for our fourth wave pullback. So I do like the idea that, ideally we have put a low in place in Erie, and that we were going to see this market continue to churn higher easily into 2026, probably June or July of 2026, up to the tune of about $600 a share or higher. And then, of course, that was our Elliott wave assessment. And again, a lot of that based on the Kennedy channeling technique. Now we can apply our indicators and oscillators. Okay, on this pullback, which has been a significant decline, even though it has been a significant decline, notice that the RSI bull market support area here between 50 and 40 is remaining intact. So I like this momentum signature. Whenever you see a pullback in price and an uptrending market, RSI tends to stall somewhere at or near that 50-40 area, which is what it did over here in 2022, did it here in 2023, and currently is doing it as well. Also, too, we have a very much of an oversold stochastic. Now, if we take a look at the candlestick price chart, Nothing as of yet that looks too terribly exciting. This is a good month candlestick wise. You can kind of see the market or the sell off beginning to slow down, but I really think what we need to do is wait for next month, August. Let's see if we can gain a little bit of ground here to the upside, maybe move down to a weekly candlestick price chart or a daily candlestick price chart. But it fits all the metrics that I kind of look at whenever I'm looking for to determine, say, okay, hey, this is an uptrending market. This is a counter trend move in an uptrending market, and based on the evidence that we have in front of us, we can make a very compelling case that, sorry about that, that the move down is indeed complete. But part of the whole, again, the genesis of the outlook, the whole starting point of everything I'm presenting as far as a forecast in Erie for new price highs, ultimately at some point within the next 12 to 18 months above 547, it began with the KTL. It began with the Kennedy timeline. Well, that's about it for me for today. As always, thank you very, very much. Have a wonderful day, and I'll see you next week.